Alrighty. Hello, everybody, and welcome to the Daily Plan. I'm your boss, Joe Boss. It's a good day. So far, everything's going well. Alright, nice to see you. Yeah, guys, go ahead and say hi in the chat. Good morning. Let's go ahead and get this stream on the road here. Of course, we have the promo, right? Plan the Profit community. Make sure you get your butt in the Discord to do some research, because tomorrow we get another wave of outlooks posted. So make sure to get your butt in the Discord. And you do that by going to the pinned links that are everywhere on all the streams that we got. And it's free. It's a free Discord. Oh my god. An actual free Discord that isn't just a bunch of guys circle jerking with a bunch of random TA charts, right? They're actually doing research on future expectations and things that matter in the world, other than just looking at bars go up and down. I mean, we still look at bars going up and down, right? But at least we look at what's going on in the real world too. And if you are interested in any of the indicators throughout the stream, join the trading group. Start a 10-day trial. Go ahead and join up. Alrighty. Hello, Harold. Nice to see you. Nice to see you, Harold. Oh, man, oh, man. Oh, I also got to make sure I am hanging out here in my little stream voice chat. So now you can see me in the top left-hand corner of the stream. That's kind of what this channel is for. It hooks into the stream. So then I can have guests and stuff at some point in the future. In fact, generally speaking, anyone in the trading group technically can join this channel. They just can't speak when they join it. I have to manually unmute themselves. So yeah, that's how this works. So hopefully we'll do guests at some point in the future. You know, we'll see how that works. Let's get the music turned back on. I'm doing a good job remembering to turn the music back on. And we're getting some breaking news here. It seems like the Russians are pretty upset at the Ukrainians, because apparently there was a Ukrainian drone strike on an oil facility sometime today. You know, we just got over, right? The US just went in and covered the Russians' butt yesterday. Literally in yesterday's stream, we were talking about the Russians covering the ass of these attacks, right, on some Ukrainian facility. And the excuse was, oh, you know, the attack was already in progress as Putin was signing the documents. So the orders didn't get there in time. And the guy who's running the special envoy for the United States to the Russians for this peace negotiation effectively played defense for the Russians, saying like, yeah, we can take the Russians in good faith on that. And now, just a day after, the Ukrainians are now attacking effectively the Russians. Like, it's just straight up like the Russians kind of had a way, even if, you know, don't get me wrong, they absolutely could have still attacked for the sake of attacking. I don't necessarily know if just blindly associating total, complete good faith to them in that scenario is the most wise thing that the special envoy did. However, this is way more blatant what Ukraine just did. Like, there's no like, oh, we were just signing the document like the Russians did. This is like way more. This is going to be you know, Ukraine's not making it easy to. It's like they want to stay at war. It's like they want to stay at war. Yeah, because if we go and we check this, yeah, Russia's foreign ministry spokeswoman Ukraine's drone attack on Russia's oil facility. Oh, I'll turn down the music. Yeah, I see it's kind of loud. Okay, is that better? Remember to tell me about music volume levels and whatnot, because we play around with it quite a bit still. But yeah, you can see the attack aimed to disrupt peace initiatives. At least that's what they're claiming. That is what they're claiming. Kiev's regime demonstrated complete lack of political will or peace. That's just what the spokeswoman is saying. I mean, if Putin actually comes out and says, no, deal's over because of these attacks, then it's like really bad. And in that case, I know we're looking at the pound here because very shortly here, in about 12 minutes, we're going to get the Bank of England rate decision. And just so we have our bases all covered here. Here are the stream notes. So the BoE rate hold expected. No major pound moves expected until after the spring statement comes out, which is right over here. Where more austerity measures are expected to be implemented, higher taxes that were promised to not be put on, that are now getting put on. Bank of England watchers will want to see how the vote is split between those staying on hold and cutting. So who's voting for a 25 basis point rate cut versus how many of the 9 people who are voting on the board at the BoE are also voting for a hold. It seems like it's 5 or 6 that are expected to be on hold, and then 4 to 3 that are expected to be cutting. The consensus kind of seems to be 6-3 as the split between hold and cut. But more specifically, we'll get more clues as to what the future expectations are when we get the statement here. However, that statement can pretty much be thrown out the window once we actually get the spring statement here. Effectively, they're just going to say, oh, we have a whole bunch of uncertainty about what our monetary policy needs to be until we actually get the spring statement. So it's really inconvenient timing for us here at the BoE, because we have to essentially try and, sit on our hands and do nothing until this thing comes out. And then maybe sometime in the first week of April, yeah, I'd say first week of April, maybe over the weekend, we get some commentary about some more explicit commentary from the BoE on what their future outlook for the economy might be. And I think that's pretty fair, and that makes sense. Oh, we got another spam bot. We got another spam bot over there on Kick this time. Boo. Boo, Kick. Oh, no, it's not Kick, it's Twitch. Oh my god. Frickin'. I don't need to buy viewers. There's something called natural growth and word of mouth and making good, entertaining, and informative content. Let's see here. Let's go ahead and keep our eye here. All right, 9 more minutes. Sweet, I'll have time to ban this dude. Ban hammer. Sweet. And let's go to moderation. All right, let's continue. Go ahead and hit add. Alrighty. Cool. Cool. We're building up a nice, healthy block and anti-spam list on YouTube, on all of our streaming platforms, so then we don't have to deal with spam in our chats and we can just enjoy stuff. Ayo, Aristotle, over there on WAP. Nice to see you, my man. Okay, so let's drop down to a shorter time frame here. So going into the Bank of England rate decision here. Oh yeah, we can turn this off. Looking at this on a 30-second chart is kind of insane. Alrighty. Let's see here. I believe we want to turn on the financial juice squawk now, going into the Bank of England rate decision. I know we still have 7 minutes, and usually I wait till like 2 or 3 minutes. But we're also getting geopolitical news as well, and I would like to be aware of that when financial juice is seeing it. So if you do hear another person speak on the stream, that is our friends over at Financial Juice. And I got a new thing here on another monitor. I got X Pro over here with a few of my curated lists for Squawk, an NX Squawk chat with all these news agencies in it, a heads of research chat, and a world leaders chat. So I have like Polaver is tweeting right now, and we'll get to Polaver. I found some pretty disappointing news on Polaver, and actually you can kind of see it here in the topics today, right? Trump doesn't like Polaver, and also a snap election was called, like, speculated on not too long ago. So we're going to be getting into some German politics, some Canadian politics, and we'll do an update on the SNB because we got a rate cut out of the SNB last night. So we got a couple of things to review. We have a few breaking bits of economic news, right? Bank of England. And then we also have, coming up in the next 35 minutes here, the US jobless claims, right? This number here. So we got quite a bit to review, and we're going to take the beginning of this stream pretty chill. No, I really don't have a need to rush through things.
At 8 a.m. Eastern Time, we get the Bank of England bank rate. Forecast no change on the prior 4.5%. The Bank of England MPC votes, and the Bank of England monetary policy summary.
I also have my inbox
Looking at
open.
some analyst commentary, Bank of America say we expect the Bank of England to keep the bank rate unchanged at 4.5% at its meeting this week. We expect a vote of 7-2 for the hold, with Dingler and Mann voting for a 25 basis point cut. Recent comments from Doves, Taylor and Ramsden suggest that they have likely turned more neutral and are likely on board with the gradual path. The evolution of data since the February meeting, Bank of England's gradual and careful guidance and hawkish forecasts support the case for a hold in March. In February, the Bank of England stuck to its gradual guidance, added the word careful to reflect uncertainty, and made hawkish revisions to its inflation forecasts, along with a hawkish read of recent growth weakness. Since then, UK inflation has been stronger than expected, with January headline inflation 20 basis points above the Bank of England's forecasts, even though services inflation at 5% was 20 basis points below the Bank of England's forecast.
Okay, doke. Oh, wow. All right. Tariffs may accelerate Canadian lumber industry southward shift. Hunt for a new market. So the U.S. tariffs are on specifically Canadian lumber are apparently going to there's a lot of plans apparently getting thrown around by the Canadian lumber companies, literally just to shift their whole operation into the United States and to mill and cut their lumber in the United States. Literally one of the one of the biggest exports for Canada is their lumber because they have a lot of forests. But they export a lot of that lumber to the United States for the US to build homes with. So now these tariffs are threatening a pretty a piece of the Canadian economy that helps keep things underlying and consistent economically. I mean, Canadian lumber is... I mean, when you think of Canada, right? Let me see if I can get a picture of this. I don't even have to say a word here. Let's see here. Images. Oh, come on. Yeah. This is what most people think when they think of a Canadian. They think of a Canadian lumberjack. A lot of people think of Canadians like this, wearing the red and black or blue and black checkered stuff, cutting stuff down in the woods, right? Getting that lumber, hauling stuff down the river, right? The Canadian lumberjack. This is what so many people think when they think of like a stereotypical Canadian.
1 minute remaining.
Of
I'll
a
lead with the Bank of
stereotypical
England
Canuck.
bank rate.
Is that true? All right, we got about 50 seconds here. So to think that all these Canadian companies could be leaving Canada
Secured overnight financing rate 4 spot
Kinda hits the
29% March
culture.
19th versus 4 spot 31% March 18th.
All right. Call it in 15 seconds here. We're getting the BoE decision. This is
10
gonna be
seconds.
a big move. Get ready, you guys.
No change, no change. Rate remains unchanged at 4 spot 5% as expected. Bank of England MPC vote unchanged 8. Higher than forecast 7. Vote hike 0 as expected. Vote cut 1. Lower than forecast 2.
Wow. So moderately more hawkish than
So the Bank of
expected.
England says Swati Dingra voted to cut rates by 0.25 percentage points. The MPC will pay close attention to any consequent signs of more lasting inflation pressure. GDP has been slightly stronger than expected in February. Survey suggests weak growth and especially employment plans. And monetary policy will need to continue to remain restrictive for sufficiently long. Domestic and wage pressures are moderating but still somewhat elevated. Energy prices are higher than last year. It's possible that labour costs have been a driver of recent pickup in non-energy goods prices. Bank of England's Bailey says rates are on a gradually declining path.
Yeah, this is actually more neutral.
Bank of England
It's-
says inflation is to peak at 3.75% in the third quarter of 2025 versus the February forecast of 3.7%. Also seeing a text release from ECB's Lane. ECB's Lane says the case for a central bank digital currency is especially strong for a monetary union,
Oh,
especially
no.
in the context of a fragmented and
CBDCs.
externally
Oh,
dependent
no.
payment system.
Oh, no.
Traders keep Bank of England rate cut bets steady and see 53 basis points by the year end.
man, CBDCs are such a huge invasion of privacy, man, and they
So
ultimately...
we're seeing upside in the British pound after that release.
Yeah. Here, we'll go ahead and disconnect
Voice
now.
news disconnected.
So net, this is slightly more hawkish from the... Sorry, that was a notification on my end. I'll mute that tab. Sorry, that's an email. Sorry. This is slightly more hawkish from the perspective of we were expecting 3 of the NPC, 3 of the 9, to vote for a cut, 2 or 3 or 4 of them, depending on who you asked. And now we have only 1 voting for a cut. And so that was a surprise. And now we have, instead of 6 or 7 voting to keep rates unchanged, we have 8. So this was pretty consensus. We are not doing anything. So from the perspective of the expectations we had going into the BoE meeting, this is technically more hawkish, so we're seeing some strength, which is a reasonable reaction. But now the follow-up move beyond this initial move that we're seeing... Oh, I gotta bring up the epic pen. Almost forgot. The initial move that we're seeing right here could ultimately get faded depending on what the actual economic data does. And also how we interpret the follow-up comments here from the BoE. Let's see here. Traders keep the Bank of England rate cut bets steady, expecting about 53 basis points of cuts by the end of the year. That sounds right. 2 more 25 basis point rate cuts sometime this year. I think that sounds pretty reasonable, don't you guys think, right? Again, it's going to depend on how hard growth gets hit in the UK. If the fiscal side of the UK economy doesn't grow well enough, right, because of the austerity measures coming in, and we end up with a particularly split government, because remember, we also have a research thread going on here in research forms. Check this out. Research forms, scroll down. 2029 UK general election. And we still have updates that we got to post here. Yeah, we have updates on the election. And as soon as we get new information, because I believe this election is occurring, well, it has to occur before the 15th of August. But I believe, if I'm not mistaken, let's see here. I was pretty certain that the election was getting called maybe sometime this year, if I'm not mistaken. Am I mistaken? I thought that the election was getting called sooner rather than later here. Man, I got quite a few messages here that I have to catch up on. We got some Israel-Gaza conflict updates. I know their ceasefire broke recently. Oh, hello. I want to go long EU off the weekly to 109.45, but can't think of reasons why I should not. Maybe if Jobless does something strange. Yeah, we do get US initial Jobless claims coming out here in about 25 minutes. You can see now we have all these economic prints, and we have Canadian PPI also coming out. Man, it's a lot of data here. Wow. Yeah. Quite a bit of data coming out here. Well, net, let's first check out Euro, how it's performing against the rest of the world. It's performing pretty alright, except against the pound, the dollar, and the yen, pretty much. It's doing reasonably well against the Swissy, New Zealand, and Aussie. So it's pretty spotty here. This is kind of a sign of the euro isn't the driver in the seat. Maybe it's the driver in the seat on the US dollar side of things. But it's you have a bunch of different idiosyncratic reasons why each of these currencies is moving differently against the euro. The euro is doing pretty well against Australia right now because Australia's growth is slowing, Europe's growth is strengthening, and New Zealand is in the same basket there. It's doing worse against the pound right now, right? You can go to here, euro, Great British Pound, right? This is because of the rate hold expectation, right? That makes sense. On the Canadian side, it's kind of wishy-washy. Depending on the tariff developments is going to depend on how Canadian dollar ultimately reacts. And then on the yen side, things I think are looking pretty good. USD JPY, right? Is this continuing? Yeah, this is doing so far so good. I don't think we'll end up going all the way down to the expectation. We might begin this rotation that I'm expecting, right? We're not going to necessarily hit this thing in price, this expectation here, this red arrow. I don't think, but I think the rotation timing going into the end of the week is probably going to be spot on here. Man, that was I mean, as far as expectations go for the week, that was pretty okay. You know, if you can't get things right on price, try and get things right on time. If you can't get things right on time, try and get them right on price. And ideally, you try and hit your expectations correctly in both price and time. And the more information you have available to yourself in indicators and tools and quantitative analysis and all sorts of different things that you can get your hands on, pricing wise and timing wise, geopolitically, fiscally, you know, monetary policy wise, any kind of information you can get access to help with timing and pricing expectations, and then just getting better and better and better at that over time is always welcome in my book. All right, let's go ahead and check out euro dollar real quick. I did set a bullish expectation here before the stream started. I was looking at these ranges right here. It's like, oh wow, that's looking pretty good. Also, the other thing I noticed is the daily yield spreads are still quite positive, and in fact, they bumped up today. If we do a bit of a replay, you can see the yield spread duration sum column here. It just, this corner one here, this corner number here is the number I look at to get a totality view of all this data here. So the higher this number, the more positive the yield spread. The lower this number, the more negative the yield spread. Generally speaking, higher positive yield spreads should be positive for the euro, and those are the bars here colored in green. And more negative or yield spreads that are decreasing go to white when they're neutral, and red when this number is all negative here, just like it is on the indicator. So let's roll this forward. I'm looking here at this 3.7 number, and we see the yield spreads decrease. And at this point, I was still holding my shorts, right? Looks like it jumped forward a couple of bars here. So effectively, I saw the yield spreads decrease over these last couple of bars here. Here's what the next bar looked like. It's also at 2.9. This one was at 2.7. But it went from 3.7 to 2.7 to 2.9. However, today, when you look at the yield spreads as they are right now, we're at 4.7, which is pretty high. So at least going into the end of the day, I'm expecting a bit of a rebound off some positive yield spread movement here. And you can even see on shorter intraday time frames how yield spreads are coloring the bars, right? All throughout this area, you had a more red shade. And over here, you had a more green shade. So this is saying, hey, on the shorter time frames, you know, you're not seeing terribly significant, huge changes over time in the yield spreads. But you're able to see like, okay, there's some buildup going on here. If we actually go to something like Euro GBP, we can probably see something more significant, I would think. Yeah, you can actually see right here, yield spreads are flipping a bit more positive. And I would assume that's actually due to the growth expectations out of the Euro zone, right, with the German stimulus. And the uncertainty, the economic uncertainty that's still embedded in the BoE's expectations. Okay. Did we save the stream? I think we saved the stream. My computer just blue screened on me. Great. Just great. All right, let's get the music going back on. For some reason, it's not playing the music. There we go. Okay, let's just get things set up basically. Okay, 1 second here. Let me send out a ping over on... Alright, cool. Everything's back. Yeah, again, the computer blue screened. Okay. We saved the stream. Let's go back to some BoE analysis. Okay, cool. And we got our notes back. And I have all my research open. All right, cool. The computer made a full recovery. Now let's see if we can make a recovery here with the stream, because usually when stuff like that happens during a stream, yeah, it's kind of over. It's kind of over usually for streams when that happens. But I have quite a few things I want to talk about here. So I'm going to keep this stream going, whether or not we have people here or not. Because I'm the boss here. I get to set the rules. Let's see here. Bum, 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 bum. Okay. I need to... Whoop. I need to reapply that. No source selected. Clear all. Sign in. Alright, cool. Okay. So we're going to just be hanging out here only on YouTube for now. Just for today, now that everything's crashed, we're just going to be hanging out here on YouTube. Besides, most of us are here on YouTube hanging out anyways. But, man, I can't do the highlighting thing. Yeah, let's go ahead and see if I can get the dock working. No sources selected? What does that mean? Oh, well. Okay, I'm going to be reading the chats here then. We're just going to be reading the chats. So we were looking at Euro GBP before my computer went kaputs here. Oh, man. That's one sign. Joe, you need to upgrade the fucking computer. Oh, yeah, one thing that we can do. Oh, man, it seems like I might have lost the... Let's see here. We'll go ahead and look at the economic calendar here over on Financial Juice. So, let's see here. How far are we? We have 7 more minutes until we get... Yeah, 7 more minutes until we get the US and Canadian data. So now we have to kind of flip our focus over to USD CAD. And again, once all the economic data is over, I'm going to be getting to, like, hey, what's everyone trading? Hey, what charts you want me to look at? You know, but right now we got a couple of things that are moving at the moment. And also, I'm kind of happy to see that this expectation, again, even though it didn't land here on price, I got the timing of this rotation coming in, because literally look at where the low came in so far on this rotation. It came in 1 bar after the expectation, right there after this candle. Yeah, that's pretty good on the timing side there. And I doubled down here on this up bullish expectation, right? This was the original expectation. This is the updated expectation 4 days later, according to the timestamp. And so far, so good. All right, let's see here. Any other news? All right, cool. And we'll turn on Financial Juice, by the way, when we get about 2 minutes away from the initial jobless claims over in the US. But we're also getting some Canadian data too. We're getting Canadian PPI. And with Canadian PPI, we're probably going to get more moves here out of the Canadian dollar. So we're going to be watching reactions here on USD CAD for a momento. So let's see here. Yeah, I already took a few trades. Did you take the trades on that EU long? And I see what you said there, Harold. EU has been my worst pair this year. Oh man, sorry to hear that. I had a pretty notorious trade in the trading group on euro dollar going into the US presidential election. Man, I made euro dollar like my bitch. I traded that thing so damn hard for like for an entire quarter, man. I took that entire ride shorting the euro. And now I'm still shorting the euro, but on the expectation that they won't be able to fulfill their growth expectations effectively. But it seems like I'm going to have to change that expectation. We'll probably get a bit more negative euro dollar drift. We'll go over why I think that's going to happen in a bit here. Let me go ahead and turn on our friends over at Financial Juice. So if you hear another person speak in the stream, that's our friends over at Financial Juice on the squawk. So I got some trades on dollar CAD, dollar yen. What direction did you take them? Oh, I know the dollar CAD one was long. Without looking at your trade logs, right? I know dollar CAD was long. So I'm assuming maybe you also did dollar yen long, but that one can kind of go both ways. There's good reasons for being long the yen too right now. Oh, let me reconnect to the... Oh. Okay, it seems like we are connected back into the streaming voice channel. So you should see me in like the top left-hand corner there. Both long. Yep.
1 minute to go now. Leave with the initial jobless claims.
All right, let's get ready, boys. We're about to see some volatility here on the dollar side, and we're getting economic data here out of the Canadian side. So dollar CAD's probably going to move a little bit here. Both long. All right, I see you. Whoa.
10 seconds.
Trying to fix the chat stuff.
$223K, $223K, lower than the forecast of $224K, prior being revised to $221K. Continued jobless claims, 1.892 million, 1.892 million. That's lower than the forecast of, that's higher than the forecast of 1.8865 million. US current account balance, minus 303.94 billion, minus 303.94 billion. Higher than the forecast of minus 330 billion. Canadian RMPI month-on-month, 0.3%, 0.3%, higher than the forecast of minus 0.4%. And Canadian PPI month-on-month, PPI year-on-year, 4.9%, 4.9%. And for the PPI month-on-month, 0.4%, 0.4%, higher than the forecast of 0.3%. Also, the US Philly Fed Business Index 12.5, higher than the forecast of 9.
Okay, that's actually not all too bad.
Also, seeing the prior revision for the continued jobs claims at 1.859 million from the original prior of 1.870 million. Current account balance for the US prior revised to minus 310.3 billion from the original prior of minus 310.9 billion. Also seeing for the RMPI prior revised to 1.3% from the original prior of 3.7%. And the PPI prior being revised for the month to 0.4% from the original prior 1.6%.
Okay, everything looks pretty good. It seems like we were expecting some negative.
So we have posted out
Inflation?
the Canadian PPI February report and the US current account Q4 report on the Financial News newsfeed, V23.
Well, the deficit in the US did not grow. It actually shrunk a little bit. Check that out. So the US debt is a bit more under control. And Canadian, yeah, that's not great. That's not great. Canadian PPI came in hotter than expected. And Canadian RMPI also came in hotter than expected. So Canada might need to be... it's not enough, frankly, to make them more hawkish. Because, again, relative to the prior inflationary prints, these numbers are much lower and within reasonable expectations of actually seeing inflation on a path for the Bank of Canada to continue their rate cuts if they want. However, they're more or less going to try and be on hold because they don't want to cut too much in a scenario where there's a trade war going on. And we'll actually kind of discuss a new expectation of mine when it comes down to who will be a better negotiator as Canadian Prime Minister with Trump, Poilievre or Carney. And it seems that Trump prefers Carney. Yeah, seriously.
Sterling down 0.4%, and the dollar extending gains against the euro after data up about 0.6%. Excuse me, euro down by about 0.6% there. Dixie up about 0.57%. Dollar yen down about 0.07%.
All right, let's try this out. All right, cool. Looks like we have that working. So I can see the chat. You guys can say hi. I just can't highlight any of the messages, I think. Yeah. So I can see the chat in a separate window, which is fine. So sorry that the chat is broken because the computer freaking blue screened, but that's just how the world works at the moment. Let's go ahead and break some of this stuff down that we have for the stream notes. Because if it wasn't for these stream notes, I would have just let the stream end on the crash, because otherwise it's a lot of work getting everything reset up and reconfigured. But we're going to be going over some of this stuff because this is all pretty important breaking news this morning. So let's get into the nitty-gritty, shall we? Canadian Prime Minister Mark Carney is set to call a snap federal election on Sunday for an expected vote on April 28th, citing two people familiar with the matter. A final call for the April 28th vote may be made by Carney sometime soon, apparently. Probably before the end of the month here. Canada's Liberal Party has jumped into the lead in some public opinion polls with the eye of an election, or on an election, as voters respond to Justin Trudeau's exit and Carney's rise to lead the government. And I know this part here is on the German stimulus. We're going to hold off on that. And I know this part here is on European tariffs. We're going to hold off on that. We're going to keep the topic relative to Canada, related to Canada.
Interfax says Kremlin aid, says Russia and US discussions to be held in Saudi Arabia in March 24th.
Okay, March 24th.
Says Interfax citing Kremlin aide Ushakov on Russian delegation.
So that's in 4 days from now. That's going to be Sunday, I believe. That's going to be pretty much right when we have FX market open next week. Alright. Thank you, Financial Juice, for that.
Voice news disconnected.
Thank you for participating. Let's go ahead and continue on with this. So, this is my commentary here. So, surprisingly, after reading this stuff here, surprisingly, Trump said it'd be easier to make a trade deal with Carney. And I'll turn down the music a little bit because I want this part to be clear. There we go. Trump said it'd be easier to make a trade deal with Carney than Poilievre. I've expressed concern about Poilievre not developing a relationship with Trump, especially when Trump was campaigning for his second term. And now it seems like Carney is stuck in a non-committal middle ground. Or rather, this is supposed to say Poilievre. Poilievre is stuck in a non-committal middle ground. Not Carney. Carney is very definitively bolstering and ballasting his support on the liberal left in Canada. This is in reference actually to Poilievre. Poilievre is not politically enough to the right to garner McGA, which is Make Canada Great Again votes. And he's not left enough to take away votes from Carney, from people who might be disillusioned with the Liberal Party. And considering now Carney is the new face of it, it's going to be harder to sway those votes back over to vote for the Conservatives. Either the polls in Canada are very inaccurate, or the odds of Carney winning the snap election on April 28th now seems more likely and more likely. So let's get into the quotes of what Trump was saying specifically. This is what Trump said. I think it's easier to deal actually with a liberal. And maybe they're going to win, but I don't really care. It doesn't matter to me at all. The president also delivered a jab at Poilievre, saying, the conservative that's running is stupidly no friend of mine. And I did find it very weird that you were still seeing people like Nigel Farage on the campaign trail with Donald Trump, but you weren't seeing anything from Poilievre. Like, if you anticipate to be the leader of a country and you pretty much know or have really good expectations that Trump is going to win, why wouldn't you try and go out of your way to support who you'd be working with geopolitically in their election? It's a very common thing in Europe, but apparently, Poilievre doesn't have the foresight for that, which is very, very disappointing, but it's also very concerning for his chances of actually being a good prime minister. Trump's comments criticizing Poilievre on Tuesday are not the first time he has been critical of the conservative leader, whose party until recently had been ahead in the polls. Well, says Trump. I think his biggest problem is he's not a MAGA guy, you know? I mean, he's really not. He's really not a Trump guy at all. In response to these comments here, all these comments, Poilievre posted on X, Mr. President, it is true, I am not MAGA, I am for Canada first, always. You know, man, it would have just been so much easier for Poilievre to just say, yeah, we're MAGA, we're make Canada great again, and just go with that. Because Poilievre could also argue in good faith, similarly to what Carney is currently doing with the Europeans. You see how Carney is going out, and he met with Macron the other day and said, oh, you know, we're going to open up all these new trade relationships with Europe, and starting with France, right? Well, during Trump's election, actually, it was fairly recent, that there was this huge meeting in Europe called MEGA, M-E-G-A, Make Europe Great Again, held in Spain. And you had all of the right-wing leaders from all around Europe coming to Spain to speak at this huge event, talking about what they think will be the future of how they want to get their politics into the rest of Europe, and how they would work together across their borders and on policy and what their common goals were. And I think it's a big mistake for Poilievre to ignore that, because it's not just MAGA in the United States, it's MEGA in Europe. And if Poilievre became prime minister and he doesn't want to work with the right-wing guys in Europe, he doesn't want to work with the guys in the Trump admin, I mean, he's going to be isolating Canada geopolitically. And he's going to become this huge, easy target. It's actually probably, now that I'm thinking about it, preferable that Poilievre doesn't win. He's not, you know, he doesn't have the foresight for this. He just doesn't have the foresight. He seems like he's a strong, you know what he reminds me of? In the United States, we have a politician named Ted Cruz. The guy is very principled, but he's kind of, he takes his principles really like to a flaw. People have a lot of other complaints against him too, right? Like the fact that he looks like the Zodiac Killer, right? All these Zodiac Killer jokes about Ted Cruz are hilarious, man. But when I look at Poilievre speak and communicate with people, it's so monotone, right? The energy is very muted. And then these strategic political moves of not trying to work with but not align with guys who are like 90% politically aligned and ideologically aligned with you. I mean, for God's sake, the guy went and did an interview with Jordan Peterson, and Jordan Peterson's like, oh wow, you seem, you know, pretty MAGA to me. And Poilievre's like, yeah, you know, we got a lot in common. I think I could work with the Trump admin. And why Poilievre hasn't leaned into that, it's a huge misstep, and it's ultimately going to cost him being the Prime Minister of Canada. And it's disappointing. It's very disappointing. But I would rather at this point, I'd rather Poilievre not become the Prime Minister, and the Conservatives in Canada find someone better. Find someone better. Because Poilievre is not it, specifically because he's not a team player. He's not willing to work with the US, and he's not willing to work, frankly, with the European mega guys. He's not a team player. He's trying to be a lone wolf internationally. It's like it's a losing approach. And he might say things that are different to that. He might say things that are like, no, Joe, we absolutely do all these work. We do work with the United States and we do work with Europe and da-da-da. It's like, well, your actions aren't saying that. And the way you're talking to Trump isn't saying that. And the fact that you've been missing in a lot of these major political events, and there's no pictures of you shaking hands of, these right-wing European leaders or any of these really important political diplomats that are now part of the current White House administration. It's like the guy has a very poor sense of geopolitical strategy and building relationships, right? It's very sad to say. It's very sad to say, because if he did have that, he's pretty much set and ready to go to be prime minister. But because of this, he's like making an enemy out of Trump, and Trump now doesn't like or care if he really gets in or not. If you didn't want Canada to become, if you don't want there to be a risk of Canada becoming the 51st state, probably be friends with the guy who's saying Canada has to fix their economy. We can't keep sending Canada $200 billion worth of subsidies or whatever. And I don't even know where that number comes from, or that talking point that Trump is saying comes from. But you have to go into the public, you have to go into the media and counteract that in a way that doesn't put down Trump. Say something along the lines of, well, yeah, that 200 billion exists, but it's all waste, fraud, pull the Doge. Say it's all waste, fraud, and abuse from our political opponents. And as soon as we get rid of that, there'll be no need for Canada to try and become the 51st state. We won't need all that money, because we won't need all these subsidies, because we'll go ahead and clean up our end of the government, right? When I'm in power. And then, that'd kind of be music to Trump's ears, frankly. That'd be music to his ears. Oh, wow, okay, cool. Canada's actually gonna take care of itself. Wonderful. Because that's the basis of his argument for even making Canada the 51st state is, there's all this money we're sending over to the Canadians and we're getting nothing in return, apparently, right? Apparently. Why don't we just make them a state? Instead, we'll put all these tariffs on them until they agree to become a state, because we can't just keep subsidizing Canada. Again, if those subsidies are real or not. Yeah. Should look for that 200 bill. Yeah. Wow, the viewership on the stream really improved when I went on that rant, huh? You guys like it when I talk geopolitics, man. Like and subscribe, reminder, all that jazz. We're not done with the stream yet. We got a few more topics to go over. Let's move over to euro dollar now. So euro dollar is holding up pretty well, I'd say. Holding up pretty a-okay. Yep, everything's doing pretty a-okay here. Alrighty. So, the Bundestag is done voting on the German stimulus. Passage of the German stimulus, specifically the 500 billion euros of stimulus, not the debt break amendment. The debt break amendment hasn't been passed. This is just, we're going to print $50 billion a year for the next decade. And put that into, it says right here. The bill means defense spending in excess of 1% of GDP is going to be roughly 50 billion US dollars. And that'll be released from constitutional borrowing restrictions. Off-budget infrastructure fund will be empowered with as much as $50 billion over 12 years. There is a caveat, though. The reason why this is passing, the reason why this is actually getting done, is because 100 billion euros of this is going to the Green Party's green energy practices. Effectively, a fifth of this money, a fifth of this stimulus money in Germany is going to solar panels and wind farms. And the Green Party in Germany, the Greens, are anti-nuclear energy. Let that sink in for a second. We just gave the anti-nuclear energy party $100 billion for their fucking cronies. Of all the countries that need nuclear energy right now, Germany is one that really needs it. So, you can say $50 billion of this. It's more like $40 billion a year of it goes to some military stuff. And even then, how much of that $40 billion is actually going to the military? And how much of it is just going to infrastructure and logistics to do military actions in the first place? How much of that money is going to go towards recruitment to get people back into the Bundeswehr, right? If I believe that's the correct term for the German military, right? Let me do a little Google search here. Yeah, I'm correct. Bundeswehr. Dude, I'm looking at the Wikipedia page. There's only 180,000 active duty personnel. That still puts it in the top 30 of militaries in the world, but 180,000 plus 80,000 civilians, it's like, let's see here real quick. How big is the Russian military? Russian armed forces. 1.5 million people. Active personnel. Now, it says there's 930,000 guys in reserve. But that's compared to 150,000, 1.5 million active on the Russian side. Like, that's still 500,000 more men. Now, at least the Germans would have the US on their side, so it's not really that the US, if push came to shove, the US would back Germany if they were, really in a bind. The US isn't going to let Germany get invaded, but then again, I don't think the Russians want to invade Germany. Oh, You know, a lot of people are very, very hyper opinionated when it comes to all this stuff with the war. I really look forward to the war being over, frankly, so I can talk about something else. Like, as soon as this war is over, I'm like, oh, thank God people aren't getting shot and I don't have to talk about this anymore. And because too many conversations day to day get political very, very quickly. Like all the stuff in Israel, Gaza, all the stuff with Russia, Ukraine. It's just, there's so many landmines that you can easily walk on top of. If you don't know how to, I don't know, properly present yourself, if you don't know how to have a kind of moderator mentality. I'm not talking about Discord moderator, I'm talking like debate moderator. To find out if the person has like super extreme views first before you say what your views are and step on a landmine and then have to listen to someone for half an hour talk about their like very extreme views on either side, right? I'm talking about both sides here of both of those conflicts, you know. It's a time sink, right? You know, you can talk about respect and you can talk about all these other things about just people yapping your ear off. And that might sound a bit, I don't know, like, oh, wow, these people have all these problems. Look how much I don't care. It's like, no, I do care about these people's problems. It's just, you know, when people are hurt in war, people sometimes want revenge, sometimes people want vengeance, right? And they go to take on very extreme positions. And you can't totally fault them for that. However, that kind of behavior doesn't get the conflict any closer to peace. Which is kind of hilarious considering both the ceasefire in Russia, Ukraine, and the ceasefire in Israel and Gaza. Well, the ceasefire in Israel and Gaza, it already ended today. They're shooting each other again now. And the Russians and the Ukrainians are like, they literally just signed a ceasefire, a partial ceasefire, like a day or not even 48 hours ago. And they're already sending drones at each other's energy infrastructure when they just agreed to specifically not blow up each other's energy infrastructure. Like, oh my God. Oh man. I mean, it's a bit insane, right? It's like, why, you know, again, maybe it's, I'm not doing enough research, right? And if I'm not doing enough research, I'm going to bring up the trade group and I'm going to recommend you share research. That's the entire point of having a free, actual geopolitics and outlook research community. So we can have a spot respectfully where we can share all this information to find out the points of view of all the participants involved in these conflicts and actually figure out what's going on also on the ground. What are the leaders saying? What are the motivations of these people? What's the breaking news? Why are these conflicts escalating again after we just had these ceasefires? What were the catalysts, right? And what are maybe the things that could turn it around in the future? That kind of thought process is the focus I want us to be on when it comes down to doing stuff when it comes down to trade research. At least geopolitical and outlooks research when it comes down to, okay, here's how we can actually use it to help our trading. Because the better we can set expectations of how long these conflicts are actually going to go on for, or if they re-escalate or de-escalate, that's going to impact assets that have exposure to these geopolitical events. So, you know, as much as, you know, I could potentially get lost also emotionally talking about, Russia, Ukraine, and Israel, Gaza. I mean, my day-to-day job here is to try and make money trading. I have to prioritize learning how to take this information and set trading expectations on it and do risk management, portfolio strategy. Like, it's, you can argue, oh, just set up an AI and hook that into your portfolio. And I look at that, I'm like, dude, I don't want like some rumor to come down the wire on Bloomberg that gets proven false like 2 hours later, and I eat some kind of massive loss for Bloomberg publishing a rumor that gets falsified like an hour or 30 minutes later. I don't want to be in that position. Or worse, you get something down one of these wires that you're hooking an AI up to, and the AI does the opposite of what it's actually supposed to do. It actually happens when you have a pretty weakly calibrated AI on market news. Like, oh, we had this bit of market news, and then it goes in the opposite direction of what rational people would be expecting. That's just poor programming on the AI side of things. But there's, AIs are probabilistic models. There's a small probability of those things happening. And you have to have systems in place, maybe kind of like in Evangelion, right? That anime Evangelion, they have the 3 Magi AI. So it's like you need 3 AI that are built slightly different to all agree in consensus that a particular news event is bullish or bearish before it executes a trade on it. I actually think that would be a fairly reasonable system for something automated, but again, setting that stuff up right now is kind of beyond me at the moment. Not terribly beyond me, but you get what I'm talking about. You get what I'm laying down here. It goes to show that deals that have been made can't be trusted to be kept. Yeah, at least so far. Absolutely, Harold. At least so far. Yeah. But in the meantime, we have to see how these things actually are impacting our markets, our day-to-day decisions here. So, as much as we want to do geopolitical analysis and take our personal takes and, learn who's right and wrong, we also have another responsibility to our family and our net worth and our financial security to protect the assets and the exposure that we have to assets that are impacted by news from those same geopolitical events. So let's go ahead and keep running down this thing here. German debt brake stimulus already. The prospect of a fiscal bazooka is causing expectations to skyrocket. GDP expectations, growth expectations in Europe are rising because if they especially get this debt brake stimulus, it's like several trillion euros. Like this thing here that passed the Bundestag and then it's onto the Bundesrat. This thing is like peanuts compared to the debt brake. This debt brake stimulus, if it occurs, it requires a 2/3 vote for it to pass. But if this particular stimulus in Germany passes, oh boy, this is several trillions of euro worth of stimulus. This is a lot of stimulus. And this will affect non-military, non-infrastructure things. So it's more likely that the euro area, and specifically Germany, will experience better growth if this debt brake stimulus actually occurs. Because if it's only this stimulus that occurs, it's not good. It's not good enough. It's not enough. You know, it might move the needle a little bit growth wise, but it's seriously not going to be enough. They need this stimulus to really see some kind of persistent upswing in GDP come in. Merz, the head of the CDU, the effectively new chancellor of Germany, comfortably secured the 2/3 majority required to change the constitution, with 513 lawmakers backing the reform and 207 voting against it. There were no abstentions. But critics, including his own party, accused Merz of voter fraud for promising spending restraint during the campaign when he was running for office, only to announce the shift in fiscal policy just days after winning. Well, that's what you get for putting Merz, someone, he's never going to be able to walk away from his reputation as someone who worked at BlackRock, right? And if you know BlackRock, you also know we read the weekly commentaries that come out of BlackRock, right? This is BlackRock's weekly commentary. So we actually see what the chief economists at BlackRock are thinking week to week. It's kind of interesting to read. So, because of this, economists caution for Germany further reforms are needed. For example, to cut bureaucracy to ensure stabilized growth. Fitch Ratings also warned on Tuesday Germany's coveted AAA rating could come under pressure if its vast spending effort is not offset by consolidation measures or fails to produce a lasting improvement in economic growth. So this is the major assumption we're going to be dealing with for the rest of the year, guys. When it comes down to kind of the lens we're going to be viewing the euro through, or at least the lens that I will be viewing the euro through, what is this going to do for growth? That's the question I'm going to be asking for pretty much most economic events and most fiscal and monetary policy events. What's this going to do for growth? And if it does nothing, or it's like very marginally small, don't get me wrong, if you do 20 things that are marginally small, you can end up with a nice, big, fat, good result. But if it's like 20 marginally okay things that it's arguable whether or not they actually help, yeah. So we actually need to see the economic growth follow through. Arguably, we need to see this absolutely follow through once we're past summer. So once we get effectively into August, we should know what path we're on growth-wise in the German economy. Now, when it comes down to the AAA rating, man, I'm pretty sure that would increase their yields, right? Because people would sell off the bonds if the credit rating went lower. Some institutions are bound, like they have it in their contract when they manage people's money, saying that they will only hold assets, and especially some bonds, that are of a particular rating. So they'll say, okay, if the Fitch rating is not AAA rated bonds or bunds or oats or JGBs, right? If they're not AAA rated something government, well, we are not going to have it in our portfolio. So if this changes from AAA to something worse, guess what? You're going to see a bond sell-off. The yields are going to rise. And that's not going to be too great. I genuinely wonder, in a credit downgrade, how that impacts the currency. Now, if we think about it in yield spread terms, that should be positive for the euro currency. That's people going into cash, right? Which makes sense. But I want to know more about where the money ultimately ends up, because that could just be one step, right? Exit the bond position, go into euros, and then maybe convert into dollars. I want to do a little more research, and maybe someone listening now to the stream can come and hop into the Discord and maybe do some research alongside with me here in the debt trading channel here. Would always appreciate it. Now we have a few other things. We have the SNB. They went ahead and cut. However, they did say something kind of new here. They said, hey, we will continue to intervene in the FX market if it's necessary. We are not currency manipulators. We will use all the tools we have at hand, which means they will go and buy or sell whatever they need to into the foreign exchange markets to move the currency. But now at the same time, they're saying they're not a currency manipulator. They're just saying, that's a policy tool. We're not. Well, guess what? Some policy tools are freaking manipulation. That's technically what policy tools are. They're manipulating economic variables to achieve a particular outcome. So this guy is just, he's like the monkey covering up his eyes, saying, if I can't see Trump's threats of if we're a currency manipulator, then, we can go ahead and move along, right? Just because Trump didn't say in his statement about currency manipulation going on in the yuan and the yen in China and Japan, that means we can probably get away with it over here in Switzerland. We're just going to cross our fingers and hope that Trump doesn't notice us doing it, because he didn't mention us in his statement. This is like, maybe it's more like the monkey putting his fingers in the air, right? Hear no evil, see no evil, speak no evil, right? I think this guy forgot the speak no evil part, because this seems really stupid. Like, there's no commentary here. Maybe there was commentary, and 3 different sources just failed to bring up the nuance. But as far as the SNB and the Swiss franc goes, yeah, it doesn't seem too good. Looks like we will have a pretty dovish SNB. So let's go check out, let's try dollar Swissy. Check out that chart here. And net, we have some strength. What a surprise, right? Look at that. So this was the SNB decision today, and look at that. Swiss franc got weaker on all this information. Who would have thunk, right? If you knew how to set expectations, if you knew how to read outlooks, if you knew how to actually interpret monetary policy expectations, it wouldn't be terribly difficult to expect these things, to expect, this should be up, right? And again, the easiest way to start is just going through and reading the outlooks. It's like eating your vegetables, but for your mind and for being a decent trader. Or not necessarily a decent trader, because there's other things that go into being a decent trader. There's like 5 or 6 different skills. I mean, I think I had this conversation yesterday. People were saying, oh, so Joe, you day trade, right? Like, well, I day trade when I need to. Oh, so you swing trade mostly. And like, well, I do, but sometimes I'll hold on to positions for months. And like, oh, so you're like more of an investor? Like, no. I look at the information for the assets I have exposure to, and I adjust my expectations based on the information. If things are moving rapidly, I will move rapidly. If things are moving slowly and consistent with momentum, and we're having a nice low volatility continuation of whatever trend is happening, I will hold for months, if months and months, or maybe a couple of weeks if it only lasts that long. It's not that hard to think through, right? You don't have to put yourself into a little bucket, but putting yourself into those little buckets is a very easy way of frankly not finding the right balance between reacting too quickly and reacting too slowly, over trading versus not actually exiting your positions or exiting your positions too quickly. A lot of that comes down to just basic competence about what it is you're trading, what are the things that actually moves it, how are you interpreting the new information, how are you setting your expectations for what's going to happen next week, tomorrow, next month, right? Like, that is, in my opinion, the most critical skill to develop. And it's like automatic. When you read outlooks, you get to see people who already do a very good job at this. People who've already been doing exactly that for decades, literally. I mean, here, week ahead economic preview. I mean, we can just, if I just make sure I click on this and then click on this. This is S&P Global. But very specifically, this guy, Chris Williamson, chief business economist at S&P Global. This guy was in charge of IHS Markit before IHS Markit was acquired by S&P Global. This guy is effectively the dude in charge and responsible for the PMIs. The IHS, or now S&P Global PMIs, the flash PMIs, you know, the things that we use to try and forecast on a month-to-month basis GDP, inflation, employment in pretty much all the major countries around the world. Yeah, these surveys are insanely important as leading indicators of all those things. And this is the guy in charge of it. And he does this is literally what he thinks of how to interpret not just the headline PMIs, but individual country PMIs and then the sub-indices in those PMIs. He goes over the analysis of it. And he's been doing this for, I think, like 20-something odd years. Like, it's insane. It's actually kind of insane that this guy has this stuff out for free. But most people don't know to look for this. And if you just read this, oh man, it would probably clear up a lot of stuff for you. Right? Well, it's free information and it's posted here in a free Discord. It's just the link. I'm not like redistributing it. I'm just sharing the freaking public link. If there's any disclosures or like, hey, you know, click and make sure that you're actually a professional or accredited investor, right? All those disclaimers, those are your problem, right? You individually still have to go through all those waivers and whatnot by clicking on links like this. But these links are publicly available, public facing, no crazy signups, whatever. Like, most of these guys who are at the top of their game want you to find these things. It's just, you know, it's a lot easier to get a big hit in the YouTube algorithm. It's a lot easier to say, hey man, I have this ICT thing, you know, and I have this guy who got this big payout from doing funded accounts, right? And if you just follow this particular strategy, you can get this huge payout too, or you can at least do something similar. Man, I don't even know how much I can, you know, until I actually see the goods and I see, you know, I don't need to know how much money someone makes personally. I need to see the freaking trades, and I need to see like some proper portfolio analysis, like a proper performance tear sheet. I don't need to know how much money they made. I just need to see that if they're doing things discretionarily, that their discretion is actually working out, right? That's all I really need to see. That's all. And that's pretty much what I do by sharing my expectations here, live on these streams, right? Oh, here I was wrong. Here I was pretty dead right. I was pretty freaking close. Go over to USD CAD. Well, check that out. I was pretty right over here. Not so right on these ones. I was pretty right over here. Not so right on these ones. I'm going to be pretty right over the next week here, right? If I go to like a 6 hour here. Down, up, and then probably down into the end of the week. And then Lord knows what happens when Parliament gets back. It's going to be insane. And we know Carney is probably saying, oh, we need to have a new election here. Because he doesn't want to have a vote of confidence held against him. But, you know, even though this isn't necessarily a tear sheet, I share the assumptions for the trades that I'm doing. Right? I can go, you don't have to watch like a billion different episodes of exactly what I'm doing to know why I'm doing what I'm doing. I explain it in each stream. Not literally in every stream, right? But I try and make these streams as noob friendly as I can. So let's see here. A couple of messages. Surely now the SNB are down to nearly zero. The market is going to start treating the Swiss franc as a currency with no cutting runway left. Unless they go negative. Yeah, they're not going to go negative. They really, really don't want to go negative. Which is why we're kind of doing the hear no evil and see no evil part of the monkey emojis here. Because they don't want to do another rate cut. Let's see here. Yeah. Karsten Janus, the chief economist at Bank J. Safra Sarasa, says this is the last rate cut of the SNB this year. My voice is starting to crack a little bit. Yes, hello, kitty cat. Let's see here. What is J.S. Sarasa? So this guy is the chief economist of this bank. Let's see here. What is their AUM? It doesn't say. Wow, this bank is old. Was founded in 1841. Oh, wow. Check this out. Swiss bank J. Safra Saracen to buy majority stake in Saxo Bank for 1.2 billion. They agreed to buy 70% of Saxo. Wow. So this guy here, when he says something about the Swiss economy, this guy is in charge of decisions that are potentially in the billions of AUM. So this guy is a big player. And he's saying, hey, this is probably the last rate cut given the current information we have and our future expectations on the SNB. Upward revisions of the inflation profile indicate that no further rate cut is needed. I think that makes sense. Alright, Ari, see you in a bit. I was gonna end the stream in like 5 because my voice is cracking a little bit here. But hopefully I got a few good rants in on this stream that I can clip. Also, I can tell this was a particularly entertaining stream because I can see everyone is sticking around and the retention is super high. We're going to have some very, very fun streams in the future, and I hope you guys will like and subscribe and all the good stuff. Yeah, man. Seeing an active chat and seeing active viewership and seeing the channel grow and all that is a lot of fun and very, very encouraging. Very, very encouraging. Because there's not many people who do analysis the way that I do it, to say the least. And by no means am I perfect in doing my analysis, right? But that's why I really heavily push this actual community, right? A lot of people like to say, hey, you know, I have a community, and it's really just a way for them to sell product, right? I still sell a product, right? I sell indicators and I sell a trading group connected to this, right? But it's not the prime, like 90+% of the research that we use in the trading group is here in the free space here. So everyone contributes to the free space on the research side. Yes, hello kitty cat. Cat wants attention and probably food. So I'm gonna make sure I tend to the cat in like just a minute here. So let me go ahead and wrap up this thought. It's really important that we have guys that we can relate with and actually do research with, because covering all this stuff takes a lot of work. You can read all these outlooks like I do. I actually read all these things. But guess what? There's maybe something you saw in the news. There's maybe something you saw going on somewhere else in the world that I'm not aware of. Maybe you speak another language. Maybe you speak French or German or Chinese or Japanese, and you know something about the politics and the geopolitics, the fiscal policy, the monetary policy in those countries better, or you know where to find really good research for those countries. And I'm just saying, hey, here's a public place. We can share publicly available research here. This isn't a place where you can go ahead and willy-nilly post, I'll take that stuff down automatically. You can't just go and willy-nilly post stuff that is meant for banking clients only or meant for fund clients only. That's a no-no. That's considered redistribution of like private stuff. You're not supposed to do that. All these things here are public-facing URLs that are available, right? There's no login required for any of these things. No logins required for any of these things here. As soon as there's a login connected to it, and it says, oh, you need to have an account at this bank, it's kind of a no-go, right? We're not sharing that stuff in here. Now, if someone else wants to take that risk and they post it on X, you know, we got no problem with sharing that stuff from X, right? We'll post X posts here if someone is sharing research on their X account, because what they have to do is go and take down that X post. And I know a few guys who that's actually, you know what, a really famous example of someone that happened to, some guy who was sharing private trade research who had their X or Twitter account taken down, is actually Wall Street Jesus. He got into a spat, I think, with Bank of America, and he got out of it somehow. I don't know what he did, but he got out of it somehow. And to this day, he's still posting B of A research and Goldman Sachs research and Barclays research, right? But there's also like 100 other people sharing the exact same information that supposedly is behind these paywalls. So it's not encouraged, recommended, or technically legal to do it, but so many people do it, and it brings attention and like free press and advertising to these groups that it is like, hey, I want to receive those reports too. Where do I sign up for a Goldman Sachs research account, right? How much money do I have to give Goldman Sachs to get access to this fabulous research, right? It's like free advertising for them. So long you're not literally redistributing like their entire PDF file there, you know, it seems like over the last several decades on the internet that so long you can, in the US at least, go along the lines of fair use, right? You're doing some commentary on your own and you use a little chart, like one chart in a whole report that's like 20 pages long, right? If you're familiar with how fair use law works, essentially it's transformative, right? You're doing your own commentary, but you're using one little chart from somewhere to illustrate one point and then move on to your next bit of commentary. But a lot of the posts, frankly, I don't think are that transformative. A lot of them are just like copy-paste quotes of like, hey, here's what so-and-so is saying, and here's a picture, right? Right? Yeah. So, I don't know, maybe someday I'll talk to Wall Street Jesus and ask him how he was able to get his Twitter account back and how that whole debacle went, right? Unless he's under an NDA, and then that'd be really sad. Then I wouldn't know what the story is. Anyways. Absolutely, I take my hat off to you and all you do for the community, Joe. Noble and admirable. I mean, at least I'd like to think it's noble and admirable, right? Because all this research is free. All this is publicly available. It's literally just a matter of, do you know this exists or not? Right? Because for most people, the things that they know exist are ICT funded account crap. And a lot of those guys are also brainwashed to think, oh, fundamentals and expectations and outlooks, oh my god, this is way too much. Well, guess what? The world is complicated. There's a lot to learn about the world. But if you're only trading like 2 or 3 assets, guess what? You can ignore 90% of this research and just look at the things that impact those 2 or 3 assets. And generally, that's where most people start. Right? When you're just getting exposure to a handful of assets in your portfolio, you're going to look for information that impacts those specific assets to help set your expectations. And you're going to do your research. You're going to look at multiple outlooks. You're going to weigh things in your head. And then whenever you're confused, you're going to do extra research on word clarification and concept clarification. If there's something that's repeatedly coming up in rationalizing the basic assumptions behind why these guys are doing what they're doing. Again, it's a lot easier to just go through and start reading these things. Just go through and start reading these things. And then make sure you're staying up to date with all the latest news and the geopolitics stuff. Again, the point of just having a free research Discord open like this is just to have a place where we can share this information easily with people. And that way, we're not the only ones doing all the freaking research, right? There's other people that we can look to. And frankly, that's more or less the basis of having an actual community, right? Guys who are like, oh, I know such and such guy got exposure to Eurodollar, and I have this new bit of research, some news that I just found about the German debt brake likely passing or not, right? Like this whole thing. I have some brand new information about the German debt brake. Let me make sure I go ahead and post that in the freaking German debt brake thread. Right? German debt brake, balanced budget amendment. Here's all the stuff that we're cross-posting here on all the news. And like, look, all these politicians on X and what they're saying. And that makes it so much easier to get caught up, especially when you're new. Like, oh, where do I find the quality information? Well, from guys who are already doing quality research, who already know how to set decent expectations and are already filtering good information. And then as you learn to do that on your own by kind of doing a monkey see, monkey do sort of thing, right? A lot of monkey analogies here in the stream today, but just by duplicating what they're doing on your own, guess what? You'll end up making a few modifications, maybe trying out different things, and maybe you'll come across new information, better information potentially than what was originally being shared. And then when you share that stuff, contribute back, people appreciate that and they're like, oh wow, this guy's also pretty smart too. You know, I'm really glad he's here sharing stuff. You know, I better go out and try and find good stuff to share too, right? And it's just a positive feedback loop, right? Everybody tries to help feed each other. And it's also a nice place just to get the research done, frankly, to have a place where you can share research. Other people can see that, help set the same expectations as you, and then you can debate things, you can discuss different ideas, different risk parameters, like, oh man, what if so-and-so doesn't vote this way, and what's the actual likelihood of this event occurring, right? You can actually have someone to talk to rather than just regurgitate everything through an AI, because guess what? AIs aren't always the best at setting future expectations because they're not always able to incorporate all the latest information unless you manually input it into the AI yourself. And sometimes that's actually too slow. By the time, like if you need to make a decision in the next 15 minutes and you need to figure out something like very, very quickly, either you type really fast into that damn AI prompt, or you just do a Discord phone call or an @ping message saying, hey, here's my question. What's the deal? What's everyone else doing? Right? And why are they doing what they're doing? And generally speaking, you'll get a faster and higher quality ping back from a real human being who knows what they're doing than just random AI crap. But again, that's my opinion. A lot of good AI is generally getting better and better and better at this stuff. And especially if you're fast enough to fill the prompt with all the necessary information ahead of time on what assumptions it is, what you think might happen, and the different outcomes, and let it try extrapolating on that. Again, AI is only as good as the information you put into it, and as good as the information it can retrieve for your prompt. sometimes the information that we're dealing with includes stuff from these indicators. Now, you could probably throw an image of this chart into an AI, right? And then try and work out, like, okay, you know, with this macro and fundamental information and these expectations and these geopol events going on and these indicators, you know, what's the net result expectation, Mr. AI? Dude, that takes way too long. Like, I can go through 15 different charts very, very quickly by using my own damn neural net, the one inside my skull. It's way cooler and way easier and way faster to just get good, right? If this is something you want to do for a few decades and make a few $1 million potentially doing, just get good, right? Just get good. Or if you're really that much of a whiz kid when it comes down to AI, make an AI that's just that good, right? Like, that'd be the dream. Just make an AI that's just that good and do it for you, right? But like I said earlier on in the stream, hopefully you have contingencies in there when the statistical model misinterprets something, right? Because just like people, we keep, you know, surprises occur and our expectations are not met. I mean, that's also the other thing. When there's breaking news, like breaking news, the faster you act, the more money you can save, either in slippage from missing your entry or in getting out of a trade from, you know, between knowing your stop's going to get hit and when you receive the information. Speed is a very, very important factor. So unless you have a way of funneling news into an AI very, very quickly and having it determine some tradable actions right off the rip, I mean, even then, it can be on the sketchy side, unless you really know what you're doing. Again, it seems like a lot of AI stuff is doing pretty well, but you gotta be safe with it. You gotta triple check your work, right? Just be safe, right? It's the same thing with indicators and setting expectations on your own. Exact same thing. You always gotta triple check and double check. And then guess what? Run it through 2 or 3 more AIs, right? The Evangelion Magi system thing, right? See if you can get a consensus, right? But I'm telling you, it's a lot faster to just do exactly that, but with yourself and a couple of friends, receiving the information as quickly as possible. Already. Like, for most people in retail, that's more than enough. That's better than most, frankly. People who are already reading that information and trading in a group. It's already better than most traders who are trying to lone wolf, solopreneur, you know, their entire trading career, right? Not that you can't do it, but those guys are like less than 1 in a million, pretty much. There's very, very few people like that in the world. Anyways, my throat is pretty scratchy now at this point, and the kitty cat's asleep, but we are going to get the kitty cat some food now. I've had a fun time just ranting and ranting and ranting. So I'll go ahead and end it here and say thank you guys for watching. And I will see you all in a bit with a working chat next time, and hopefully no blue screens. In a bit.